Does the recently passed One Big Beautiful Bill Act affect your business? Let's find out. First up, no taxes on tips and overtime. The Act introduces 2 tax deductions for tips and overtime pay, allowing filers to deduct up to $25,000 in qualifying tips and $12,500 in overtime pay, or $25,000 for joint filers, on their tax return. The deductions are currently set to expire on December 31st, 2028. For businesses, it's good to note that you and your employees won't see any changes to your paychecks, as the deductions will be taken when you go to file your taxes. Second, the Act makes a few changes to 1099s. The threshold for issuing 1099s is set to increase in 2026 from $600 to $2,000, meaning businesses will only need to furnish 1099s to individuals or businesses they paid that meet the new $10,000 threshold starting next year. The Act also changes the 1099-K reporting requirements, setting the requirements at payments made to one person that exceed $20,000 in 200 transactions. The previous requirements affected how gig workers reported income from things like ride-sharing apps or property rentals. Third, the Act tweaks some research and development tax credits and how certain assets are written off. The bonus depreciation introduced by the Tax Cuts and Jobs Act, which has been phasing out since 2022, is now made permanent, meaning businesses can write off 100% of the costs of certain assets in the same year they were put into service. Similarly, the Act removed the amortization requirements of certain R&D tax credits, meaning businesses can write off any R&D related expenses immediately instead of spacing them out over the course of 5 years. Be sure to like and subscribe to keep up the latest updates on the One Big Beautiful Bill Act and how it will impact your business.